My next guest, Wall Street legend, knows how to sail through choppy waters, which could be the case in the second half of the year. I want to bring in Bob Dahl, Crossmark Global, their CEO and CIO. Bob, so I saw your note, you're calling this a high-risk bull market. What makes it high risk?
The high risk is the valuations are high. It has not mattered because earnings have been off the charts and the Fed has not been antagonistic. Second half of the year, my guess is earnings might exceed, but nowhere near the amount they exceeded in the first half. And the Fed may become a little antagonistic. So that, I think, needs to be factored in. It's going to be harder in the second half than the first half.
Oh, man. OK. So with that being said, are there adjustments that should be made to portfolios now, or what are some of the things that people should have top of mind in terms of if things just don't go as smoothly in the second half?
You just have to make sure you've got companies with reasonable valuations, strong free cash flow. That will, I think, insulate to some degree against any turbulence we might see here in the second half.
The JOLTS beat today. Earnings, jobs report Thursday, not Friday. What are you anticipating?
Yeah, mostly good news. Look, it needs to be good news to support stocks at these valuation levels. We can't have just on-target numbers. We need to exceed, as we did so much in the first half. I mean, when you think about the first half, you think about the war, $100 oil, new Fed chair, bunch of things. But really, it's how much earnings exceeded expectations. Off the charts. Only the kind of advance in earnings we see typically coming out of a recession. Of course, right. We're nowhere near a recession, it would seem.
Right. Yeah. I mean, that's the one distinction I think a lot of people miss with this move in the market and the economy. Hey, real quick, the consumer confidence was out today, came in below expectations, but those are surveys. Retail sales recently through the roof, the Red Book through the roof. How do you reconcile those, and what influence would that have on the Fed?
So I think the consumer is spending money, no question about it. If I wanted to pick on it, I would say that they're spending rate of increase is higher than the rate of increase in their income, right, which means they're bringing their savings rate down, and that can't continue forever. But so far, so good. Consumers fine.
Yeah, we see that with personal income and spending numbers all the time, right? I mean, the earnings, the savings rate is obscenely low. I know that you still like Citigroup, and that's, by the way, we're going to show a chart. That's been extremely strong. You like ConocoPhillips, and it's a little bit of a head scratcher. I guess you think the selling is done here with this one.
Yeah, I think that's the case. Look, the stock's down 25% from its recent high. I think it's one of the strongest in the group. Their break even for price of oil is about $45. They can increase their dividend even if oil falls to $55. Right. Strong player, knows how to get it out of the ground.
All right, 20 seconds. Adobe, we talked about giving Purple Hearts at the top of the show. If this one works out, my man, you're already a Wall Street legend. If this bad boy comes back from where it is now, I mean, real quick, what's going on? Is it just oversold?
So software, we don't need it anymore, tongue in cheek, obviously. This stock is down two-thirds from its 2-year-ago high, and earnings have doubled.
All right.
So the PE is down 83%.
We got you on record. We're going to give you credit when it works.